In this video, I'm going to reveal the exact 3-step strategy that Kano used to have a record-breaking $20,000 day at the start of this month. I'm not going to overcomplicate the process. We're not going to be using 10 different concepts within this strategy. We are just going to focus on the ones that you need. Reducing the noise in your trading, simplifying it so that anyone can understand the strategy, and then you can take the strategy, use it to scale your trading results. Just like this trader has from watching the free content here on YouTube. This was a message I received this week. Unbelievable results. So what are we going to cover specifically in this video? First, we're going to start with the 3-step trading plan. You can get a copy of it in the link down below. And then we will move on to 2 weeks worth of backtesting from the start of August through to the middle of August. And then finally, I will show you what those results would look like if you scaled your prop firm capital and then used that to maximize the results rather than taking on heavy risk yourselves. Okay, let's get into step 1 of the trading strategy, which is to mark out your time-based liquidity. This removes any guesswork from where a valid liquidity level is on your chart. So these are the main ones we want to focus on: previous week high and low, previous day high and low, previous session high and lows. These will be the most important liquidity levels on your charts. So if we come over here to TradeZeller, this is where we're going to be running the back test. You can see down here, current balance is 50,000. We're going to be trading a $50,000 account. And this will be very important when we go to look at the results and how you guys can scale your trading at the end of the video. That is a very important point to make. We're trading a 50K account to make it realistic. So we start on the weekly time frame. Literally just mark out your previous week high and your previous week low. We then drop to the daily time frame and we mark out our previous day high. And then in this situation here, the previous day low is just previous week low. So we don't need to mark that out. And then we obviously drop down to our lower time frames. And you can see here, we've got Asia high and low. We've got London low, London high. And obviously the only valid liquidity levels at the moment are London low and Asia low. Reason being is these are the only 2 levels that haven't been taken out today from a session liquidity standpoint. So now we go on to step 2, which comes into market structure. We're going to identify market structure on the 5-minute time frame and the 15-minute time frame, and then we're going to literally just trade from 5 and 15-minute gaps. The important thing to note is that step 3 will give you an insight of how to trade from these gaps. We're not going to just blindly short a bearish gap, and then we're not just going to blindly long a bullish gap. Okay, we need to wait for confirmation out of these gaps to know whether they're going to work or not. So wait for step 3 for that. However, the important thing here is price is trending. Okay, too many people are just trading from random 5 and 15-minute gaps with this model. You want to ensure that price is trending and creating lower highs, lower lows in this bearish scenario, or higher highs, higher lows if you're bullish. Okay, so what this looks like when we come over here to 9:30 open on NQ, you can see we're currently bullish, higher highs, higher lows. Let's play the first 15-minute candle open. Up forward, and you can see a huge move up here at 9:30. We're clearly bullish, right? Higher highs, higher lows. So all we're waiting for at market open now, we can go down to its 5-minute time frame if we want, and we can see that we formed multiple 5-minute gaps. I do not care which gap we trade back into. If there's a lot of momentum behind the move, we'll trade back into the first one and run from there. Okay, so what we can do here is mark out that 5-minute gap, and then we just need to wait for a move back into it. That's where we go forward to step 3, so that we know what to do when price returns to this fair value gap. So here, step 3, the entry model. You can see that this is a zoomed in version of this leg of price. Okay, lower high to lower low, back into the gap. Lower high to lower low, back into the gap. The important thing now with step 3 is you get confirmation of when to short this bearish gap. Okay, maybe we just trade straight through this gap because you've got multiple here. Okay, we don't just want to long this gap here with a stop all the way down here because we don't know which one's going to obviously hold. This first gap could hold in terms of the candle close, but it could spike through. So you can't place your stop there either because you'll get stopped out. Okay, so how do we know when to place an entry and how do we know where to place our stops? So when price returns to a gap, obviously it's the opposite scenario we've got on our chart at the moment, we want to wait for an inversion of the fair value gap that trades into the bearish gap. So let's see what this looks like on our charts and wait for this confirmation on this Monday, the 4th of August. Need to pull back a little bit further. You can see we pull back into the range a little bit more. And then we've got this 15-minute fair value gap. So all we need to do is mark that out. We don't need price to draw down to the lower one, but it's literally just focused on market structure, okay? New higher high, we're expecting a new higher low at a bullish 5 or 15-minute fair value gap, according to, obviously, this market structure here, right? Okay, so finally, we get an inversion of this 2-minute here. You can see 3-minute, there was no gap. 2-minute, there was. Okay, so we use this 2-minute gap. It's slightly small. However, closure above gives us longs, stops below, and then we're going to target our next time-based level. Okay, so if we move on to our entry checklist, make sure you're following this, link down in the description below. Trading with 5 or 15-minute trend, which we are, price trades into the 15-minute gap, and then we get an entry confirmation with that inversion fair value gap. We want 2R to next liquidity level. Our next liquidity level is that previous day high. Do we have 2R? We've actually got 3.2. Perfect. So we place a buy order here, risking that $250 or as close as possible. And then we let this trade play out. Trade into new highs, cover our risk. Obviously, we're not going into any management techniques here. We are literally just focusing on the bare bones of the strategy, being the fact that that previous day high is the draw on liquidity. So there is obviously trade one. Okay, so on to Tuesday, we need to make sure that we've got all of our liquidity levels mapped out. Previous week high and low still in there. Previous day low now changes. And then obviously we've got a new previous day high as well. Down to our lower time frames, let's see what happens at market open. At the moment, both session highs have been taken and previous day high are rejecting. Maybe that is a sign of bearish pressure to come. Obviously, session lows look like they've been taken already. That does potentially leave the door open to previous day low. However, that is a very long way off. Okay, so we start breaking down now. We've probably going to create a an even bigger move, 15-minute gap here. Obviously, there's going to be some 5-minute gaps here. So let's just wait for price to start pulling back. And you can see we get that move in, and then we create this 5-minute fair value gap just here. So this is what we need to be inversed in order for an entry short. Obviously, if we come over to this, you've got that move lower back into a 15-minute gap, which we've got here. That move lower at open back into that 15-minute gap. And then you can see here the entry model, we've got the formation of the opposing fair value gap, which we wait to become an inverse fair value gap on the close below. And you can see that here with that orange fair value gap. Okay, so that triggers an entry. When you've got a situation like this where we are miles away from previous day low, you can just target a 1 to 2. That is typically what I'd recommend. So let's take an entry here. Again, the same risk, $250. And let's play this one out. Cover risk. Now we've taken liquidity. And we get stopped out, break even on that. And see, break even saves us from a full loss. I'm not into any of this set and forget. If you want to know the more in-depth rules of how I manage trades, come and trade with us live every single day, London and New York, inside the Discord. And obviously get access to the more in-depth trading plans and video content as well. Okay, so on to Wednesday's price action. You can see again, we've marked out a new previous day high and low. And see previous day low has already been taken. Previous week high and low remain the same. This is how simple it is. Your levels are going to be so easily identified because it is just a completely mechanical approach using time-based liquidity. So drop down to our entry timeframes, and you can see here, price is looking a little bit messy at the moment. We've got Asia low below, but that was a reversal from previous day low, and then we've got a London high above. Let's see what happens. So we get that move higher. We reject those London highs. We create this fair value gap, trade straight through it. Price isn't trending at the moment, therefore there's nothing to do right now. Fail to break out of those highs again, leaves me uninterested in any of these gaps here. That one's been mitigated already. And then we get that break higher. Okay, if we get that break higher, you can see we're quite close to this previous day high. Therefore, we're probably going to trade into that if we get confirmation that bullish fair value gaps want to hold. Okay, so you can see here a 5-minute fair value gap was formed. Let's wait to see whether price can pull back into that. These are our areas of interest intraday, where you'll see that price will trade back into 5 and 15-minute fair value gaps before the next move towards liquidity. Go and check it on your charts and you'll see it happens day in, day out. Okay, so we get that move into the 5-minute, 3-minute fair value gap formed. So yeah, candle closes here on the 3-minute, 5-minute gap, 3-minute inversion, stops below, targeting where? previous day high. That simple. We don't need to do any other analysis than mark out our market structure, our fair value gaps, and wait for the inversion. Target whatever liquidity level you've got on your charts. Sometimes that will be session highs and lows. Today it's not. Once again, let's take a trade, $250 risk, and then targeting this previous day high. Remove risk, a bit late there. Let it play out. And you can see once again, that 5-minute gap is holding. This is why we use those for our entry levels. And there you go. You get that previous day high reached for plus 2.7. So again, guys, you know the score. Map out your previous day high and lows. You can see here we've done that again. We're well above previous day high at this point. Drop down to our lower time frames and wait for price to start giving us something. In this situation, because we've already traded way above previous day high, I will get rid of that. It's not of interest anymore. And today, going into this session, the first things of interest are obviously going to be London low and Asia low. Previous day low is way too far away for me to consider. So price opens, sweeps high of day, and then we move lower. We're still not trending though, so we can't take continuations if we don't have a trend in place at the moment. At this point, we do break below this low. Therefore, we've got a shift and we can use this 5-minute fair value gap as a potential area that we trade into to then continue towards liquidity on the day. You can see here at the moment, there's just no fair value gaps formed on the move into the 5-minute gap. Therefore, we cannot look for any entries. Maybe now we've got to move higher. There will be 3-minute, 2-minute, nothing, maybe here on the 1-minute time frame. And there you get that inversion. Let's just check that was a candle close. It was. So obviously stops above this point. You only really need to target London, but you could potentially target Asia as well. Look to manage it along the way. Again, $250 risk. Let's see how this one plays out. And see there, lows get taken, which would mean, it's hard to manage this here, but that would mean you'd move stops to break even. So let's do that. And obviously we're going to be taken out of that, I believe, break even. Or roughly. And that's because we had that continuation lower and then we failed to push through the low. Up to 5-minute time frame, nothing else there. And it looks like we've just missed out on that play today, but I don't care. I'm reducing drawdown. Okay, let's zoom out to 15 and see whether that bias was right in the end. And it was absolutely fine. Don't care. Stuck to my rules, management, and that's going to save me a lot more than it's going to harm me missing this trade today. We want to protect those profits that we've made on the previous 2 or 3 days this week. Once again, previous day high and low gets drawn on for the last day of the week. Obviously, previous week high and low are still intact. There's no need to do anything there. And then our session high and lows are automatically plotted on our charts. So 15-minute opens, let's see what we get. Huge move higher. Let's see if we form any gaps. Looks like at the moment we're drawing towards that previous day high. So we just need to look for continuations from there. And we trade straight into it without a pullback. And you can see once we trade into that previous day high, price starts to chop around. And that's because this is our key time-based level. You see that happen a lot once those objectives are met in price. So here's the results from that week of trading. Obviously, you've got a P&L here of $1,345. Might not seem a lot to some of you, but the power comes from realizing this is only one $50,000 account. So we're going to get into the math behind this, the funding options, the trade copies that you have in a moment. But yeah, a couple more things. Obviously, 50% win rate. The other two, obviously, they weren't losers. They were technically break even. And that's a big part of my trading. Obviously, if you want to learn the more intricacies of how I manage, phase 2 of Rise Trades is actually in the works at the moment. You may see, new rebranding on some of the material that I've been posting. Traders Launchpad will be launching. All current members will obviously be getting that upgrade as well. Just obviously improvements on the delivery of material. But yeah, day win rate of obviously 50% as well. Friday, no trade day. The biggest breakthroughs come when you realize you do not have to trade every single day. By preserving your capital on Friday when there is no trade, that is going to do you wonders for your profitability and your consistency moving forward. But yeah, let's jump into the math behind how you can utilize this 50K account that I said we were trading, $1,000 on the week, and how you can actually transform that into these kind of numbers here, okay, or these kind of numbers here. So that $1,345 on the week, if you manage to get max funding with Apex, or if you manage to get max funding with FTMO, that is going to 20x your profits for that week, okay? So before we go into So let's jump into the math behind it. We'll come back to this slide in a minute, but I want to show you how you can actually transform that $1,345 into a potential $26,000 week or a potential $21,000 week. But yeah, let's get into it. Funding options, futures, and Forex. Whatever you guys trade, this is what I would recommend. There's obviously tons of different options out there. Funded Next Futures, very good firm at the moment. Apex Trader Funding for max scalability of 20 accounts. Traderify offers straight to funding solutions. Top Step, obviously OG in the game. Forex, FTMO, get max funded with them. Then you can move on to 5%ers or maybe Funded Next, maybe Funding Pips. FTMO, top dog in the space. You want to start with them, okay? Use code RISE for discounts at some of these firms, Funded Next, Apex. Trade copiers, this is how we're going to trade multiple accounts, okay? You only need to be able to make a few $100s on 150K, but then if you times that by 20 accounts on Apex, if you times that by, however many accounts that you can scale up to, it doesn't have to happen overnight, you're going to be having to use these trade copiers, okay? Futures, trade copier, or trade syncer, Forex, social trader tools, or Traders Connect, okay? There's not much else to that. That's how you're going to scale your capital. Capital allocation, futures, and Forex. So with Apex, 20 times 50K accounts is what I probably recommend. They have the best drawdown to profit target ratio. You could go 20 times 300K if you wanted. It's going to cost more and it's going to be harder to pass those accounts. You're going to get 50K worth of drawdown on these 50K accounts. I do not care the fact that you're going to have $1 million in funding. What you actually have is a 50K account. You have 50K worth of drawdown. Okay, so if you're going to be risking 10% of drawdown, which is what I recommend, no matter whether you're trading futures or Forex, you're going to go from risking what we were doing on this video of $250, you're actually going to be risking $5,000 per trade. And that's how you start scaling up. So you're going to get access to $50,000 of funding for the cost of $2,400. Pretty wild, right? You're going to be only risking $2,400 instead of 50K of personal capital for the same amount of leverage. Forex, very similar scenario. You're going to go with FTMO, 4 times 100K accounts. It's going to give you 40K worth of drawdown for $2,500. Yes, it's not quite as much as the Apex scenario. However, the drawdown on these accounts doesn't scale with your equity as well as it goes. But back to the math behind this, right? So if you are literally just going to be trading one of these accounts, this is 20 Apex accounts. So you go from this P&L on the week, but if you had connected 20 accounts together, that would be 20 times. That is going to be $26,900. And this is what your P&L is going to look like. This is how at the start, Kano is obviously hitting 20K days because he's using the scalability of funded accounts. FTMO, the same kind of thing. However, obviously bigger accounts, you're going to be 5K in one, 5K, 5K, 5K. That's based off risking the same amount, 10% worth of drawdown in each account. Okay, that's going to give you a total P&L for this week of trading for 21,500. Okay, this is a scalability of trading. In my opinion, futures is the way to go. They are paying out a ton more than what the FX firms are at the moment. But any questions to this, drop it down in the comments below. I think this was worth going over. Hopefully can give you guys a path to the goals that you guys have. But just take it step by step, go one account, get a payout, scale that into another 5 accounts, another 10 accounts, whatever it may be. It doesn't have to be Apex and it doesn't have to be FTMO. Obviously, you've got these options. Here's what I'd focus on first. Hope this video was helpful, guys. If you want to join the Discord where we live trade daily, London and New York session, you know what to do. Links in the description below. Good luck with your trading. See you guys on the next video.